It was no accident that Warren Buffett became wealthy. For decades, he adhered to a single straightforward rule that transformed modest funds into billions. I'll reveal his trade secret to you today, along with how you can apply it. This is the secret to true wealth, but most people overlook it. One of the wealthiest men in history, Warren Buffett, has a simple secret. It's actually so easy that most people don't notice it. We're dissecting the precise tactic that allowed Buffett to grow his $10,000 investment into over $100 today. This one rule has the power to alter your financial future, regardless of how long you have been investing or how new you are. Let's get started. What is the billion-dollar secret of Warren Buffett, then? It all boils down to one effective tactic: long-term value investing. Here are the easy steps to follow. Number 1 is buy wonderful businesses. Warren Buffett invests in stable companies rather than stocks. This is his precise checklist. 1. The durable advantage test. Is the business in a position similar to a monopoly? For instance, the Coca-Cola brand. Is it viable in any economy? During recessions, similar to See's candies. 2. The simple and predictable rule. A Buffett stays away from technology he doesn't understand. He didn't bet on Amazon early. Instead, place bets on clear winners: American Express, Gillette. 3. The management matters factor. He only supports CEOs who reinvest profits sensibly, like Apple's buybacks. Think like owners, not just employees. Real-world example. Buffett loved Apple's devoted client base and cash reserve when he acquired the company, not the iPhones. It is now his main source of income. Your takeaway? Wonderful is not synonymous with trendy. Profitable for decades is what it means. Number 2 is hold forever. Rather than purchasing outstanding businesses, Warren Buffett's top wealth-building strategy is to never sell them. This is why it works. 1. The influence of never selling. The top 5 assets of Buffett have been in ownership for more than 20 years. Coca-Cola for 35 years. As an illustration, his 1994 investment of 130 cents billion American Express is currently worth $27 billion, just from holding. 2. The reasons most investors fail. They sell too soon, due to fear, boredom, or greed. They fail to take advantage of compounding Berkshire receiving $700 annually from Coca-Cola dividends alone. 3. Buffett's easy rule. Forever is our favorite holding period. We view stocks as companies rather than lottery tickets. He added positions at Apple and Bank of America, even during crashes in 2008 and 2020. 4. How you can do this. Invest in 3 to 5 forever stocks, such as index funds or blue chips. Turn off financial media to ignore short-term noise. Let dividends and reinvestments handle the heavy lifting. The bottom line: time, not timing, was the key to Buffett's success. You get richer the less you trade. Number 3 is be greedy when others are fearful. Contrary to what most investors do, Warren Buffett built his fortune in the exact opposite way. He sees an opening when everyone else is in a panic. This is how this tactic operates. 1. The crisis playbook of Buffett. Buffett invested $5 billion in Goldman Sachs during the 2008 financial crisis, making a $3.70 billion profit, and he purchased $25 billion worth of stocks during the 2020 COVID crash, when everyone else sold everything. Be fearful when others are greedy, and greedy when others are fearful is his rule. 2. The reasons this is effective. The best time to buy is when Monetive announces a market crash. Your selling are selling. Stocks fell 52 weeks. 3. How to proceed safely. Keep cash on hand in case of crashes. Buffett always has $100 billion or more on hand. Concentrate on unbreakable businesses, such as Apple, which Buffett purchased during the 2016 dip. And ignore temporary discomfort. Stocks may decline further before rising. Actual example. Buffett purchased Occidental Petroleum at $52 during the bear market of 2022. It is currently worth more than $90. Your action. What would Buffett buy today? Is a question to consider after the next market meltdown. Number 4 is ignore the noise. By ignoring the chaos, Warren Buffett amassed a fortune of $130 billion. Here's how you can as well. Buffett's strategy of silence. He does not own a trading computer. He does not check stock prices every day. He works in a windowless office without stock tickers. 2. The media says, sell everything. A recession is on the horizon. Buffett either purchases more or does nothing. For instance, despite CNBC's dire predictions during the 2020 crash, Buffett continued to own Apple, which has since increased 400%, but widely off. 3. Using this physical distance, I examine your portfolio every 3 months rather than every day. Clear out your phone's trading apps. Ask yourself, will this news matter in 5 years? As a mental filter. COVID did not. Not even inflation. The next crisis won't either. Put business first. Warren Buffett's winning strategy has 3 simple rules. Buy strong brands during temporary troubles, like Coca-Cola in 1988. Focus on customer loyalty, Apple, and cash flow, Bank of America, and hold forever. His $1.30 B Coke investment now earns $700 yearly, while $5 B in crisis-era Bank of America grew to $35 B. Even C's, Candy's $25 in purchase, made $2 B by raising prices gradually. The lesson? Great wealth comes from buying quality and being patient. Invest like Buffett by purchasing stable, straightforward companies like Apple or Coke when others are in a panic. Keep them for decades. Compounding will work if you ignore market noise and reinvest dividends. What's his secret? Cleverness is inferior to patience. Comment below for the 3 stocks Buffett would purchase today. Avoiding mistakes is more important to Warren Buffett's success than selecting winners. He built his $100 fortune by holding 10 stocks for decades. He never timed the market or gambled on hot stocks. Buffett purchases more basic companies with recognizable brands, Apple, Coca-Cola, and steady profits when others panic sell during market downturns like 2008 or 2020. The majority of investors fail because they overtrade, overcomplicate, or follow trends while ignoring taxes and fees. Keep in mind Buffett's maxim, it's not about being brilliant, but avoiding stupidity. At 8%, a $10,000 investment increases to $100,000 unless fees and panic selling cause it to drop to $76,000. Do you want more financial sagacity like this? Click subscribe right now. We offer easy ways to increase your wealth. Please share your top money question in the comments section below. It may serve as the basis for our upcoming video. If this was helpful, tell a friend who is in need of it. Until we meet again.